Hello everybody, welcome to TraderMerlin Show. What a crazy Thursday afternoon edition we're going to have today. Of course, yes guys, we will talk about GameStop. It's getting to the point I'm already sick of GameStop and Reddit and all the different topics, but many people just don't understand what it all means and how it works. So we'll talk about that today with our guest who's going to join us here in just a second. But I wanted to start off really going into a listener question, and I'll show the question here in just a minute. But it was about what are some of the tools that floor traders use? And there must be some similarity between what a NYMEX floor trader, a CME floor trader, and New York Stock Exchange. Is there a commonality there? So I thought maybe we could do something along those lines. The topic du jour will be floor trader pivots with John Rowland, who spent 30 years on trading futures. He's was a natural gas floor trader. I gotta say, that's a dying breed there. No more real floor trading going on. But joining me from the East Coast, we've got Mr. John Rowland joining us today. John, how you doing?
Hello, Merlin.
You're on the New York Stock Exchange. I love it, right out front.
Yeah, it's right behind me. Ooh, it's cold today.
Brr, yeah, chilly willy. So you got the parka on there and everything. How you been, my friend? It's been quite some time since I've had you on the show.
Yeah, I'm doing well. It's been over about a month or so. Yeah, I'm still busy with Barchart, running my weekly webinars and trying to keep my head in the game, you know, with all this craziness going on. It's amazing in the markets right now. I mean, you've been in the business as long as I have, at least the equities market business, and I have never in my life seen just bizarre behaviors.
Like yeah, I'll tell you, I've seen it before, but not as widespread. So, for example, back in the day, there was one or two stocks that got just skyrocketed because of short squeezes, and you kind of saw it coming, and we could look at it and point and go, "Ooh, wow, that one looks good." This is like just a pond full of sitting ducks with regards to these short sales or short squeezes out there. And it's interesting some of the things that are happening behind the scenes with regards to restrictions, and I want to dive into that. But let's get through the whole topic of floor trader pivots. I want to make sure we get that topic dialed in because I know some people probably came in because they saw the graphic there of the floor trader pivot. So talk to me about floor trader pivots, what they are, and maybe how they were beneficial or are beneficial to you in your trading.
Well, basically, they're just a very simple mathematical calculation that's based on the previous day's highs and lows and closing values. Those are folks that are familiar with average true range or ATR. It's basically a one-day average true range. And what it does is it creates what we call a pivot point, kind of a neutral or equilibrium ground value. And then you have layers of support and resistance above and support below. And so you think about it in terms of like a pendulum, like in a clock, you know, that swings back and forth. And what these pivots do is as the market moves, as it swings through this neutral, this equilibrium pivot, then the momentum of the intraday market will swing to one of these support or resistance areas. So they're not necessarily like perfect numbers. They're more about as the pendulum is swinging, how far could the pendulum swing before we can anticipate the change in momentum. And so one of the ways that I like to use them is that I use them to help me find, entries for, based on my regular trading philosophies. But I really use them for help me to set those intraday realistic targets. And a lot of times what is nice about them is that you might look at structure on a chart. You say, oh, this is where I'm going to set my target at 3-to-1 or 4-to-1 or 5-to-1 or whatever. But if you believe in these kind of momentum numbers, these swinging numbers, that a lot of times you can set a target that's a little bit farther and capture a larger percent of that move. Now, I use it also in combination with my other ATRs, my daily ATRs. And when you use these two numbers together, the components of these two numbers together, it's amazing how accurate as an area or where I can set these targets for.
With those pivots, guys, it's interesting. I want to make sure that everybody senses difference. Some people will think that you'll hear someone say a pivot high, a pivot low. That is normally a peak of price, where price has gone to and turned and moved to south side, or a pivot low would be where something turned and moved up. This is different. This is taking taking historical data and taking a mathematical calculation for it. So if you're using floor trader pivots, you'll have R123, so resistance 1, 2, 3, and support 1, 2, 3. And basically it's taking these previous numbers and some calculation and spitting them out automatically on your chart. And it's almost like a Fibonacci extension where it will plot lines and you go, well, that line doesn't line up with anything. And it's saying basically that based off what this security has moved over X period of time, this is where it most likely would go. So it's kind of using Fibonacci type of psychology, saying it's an expected move based off previous price. So that's why I wanted to clarify this, because I think some people think a pivot is just a high or low. It's not.
No, exactly. It's a combination of this mathematics, like you said, Fibonacci's. I tend to think it's more about this average true range, this philosophy that that a market has kind of a static behavior to it, and again, an average true range. I don't want our folks to get caught up, that it's a value that says, hey, the price has to move this much in one day. Average true range doesn't care how long it gets there. It's just it's based on a distance of price movements. And so what you could see is an ATR in an hour or 5 hours or a 24-hour period. But when you combine them with these pivots, these floor trader pivots, you can really start capturing some greater rewards and also finding when you start lining up your pivots with like your structure that like your listeners know, your supply and demands or support and resistance, whatever, and they lie on top of each other, well then that's just kind of a confirmation to a structure or an entry that you've already have previously found.
Now, do you think that these are, I guess, work better on specific markets? I know you were a natural gas guy for a long time. You did a lot with crude oil as well, but maybe a lot of our viewers might just be equity index traders or maybe individual equities. Is it applicable for those types of markets as well?
Yeah, I think because it's based on math, right? So, you have to understand though that when you have like outside crazy days, like for instance today we had some big price movements, that you can get some large swings, and that could distort your pivots for several days. But today, for instance, I mean, if you allow me to share my screen, and we can look at, let's say, we can look at, let's say, where am I at? How's this? Let's try this. Hang on.
Yep, got your bar chart. And then there's a gray box there. You want to move that whatever that is.
That gray box is you.
Get rid of me.
There we go.
Oh, great. Apple, my favorite. Loving it.
I know. I did that for you.
Thanks, buddy.
All right, so I'm on Barchart, and you can go to any asset, but we'll go to the S then, if that's what you want to do. But I just want to show folks where to find it. Under the technical section of any of the assets we have, this is where you can find what we call our trader's cheat sheet. And you mentioned Fibonacci, so we have 44 technical indicators that are built into here, so you can customize this how you want. So I'm just going to do floor traders pivots, and again, blatant plug here. You can see that there is a link here to watch a webinar that I just recently did. So what we can see here is, first of all, it gives us a pivot point. Our pivot this morning was 138.59. Our first resistance, our second resistance, and our third resistance, and then our supports. So what can we do? How can we use these numbers as price moves through these values, right? This pendulum of swinging back and forth, we can start looking for momentum. Now, before I move away from this screen, I do want to show you under the technical analysis section, we have over here is our average true range. I don't know if you can see that.
Yep.
But you can see the average true range for Apple is a little bit about, well, the 9-day right now is $4.38, but the 14 days $4.10. So go back to my cheat sheet here.
And real quick before you jump into that, for the viewers out there, this is This is something that's very similar to an order book that we looked at. Like if you look at the ladder or the dome or the matrix, which is how futures are normally priced, it's a vertical pricing structure. So you see right in the middle that kind of yellowish line. That's saying that's the last price. Everything above that is some form of implied resistance, and you can see that it's calculating out. He's got pivot resistance, pivot point first resistance, pivot point second resistance, and so on. Down below is going to be demand or support for that. So you can see kind of if price were to go up, those are some logical numbers built off these pivots that they may struggle at, and vice versa. If price starts to fall from that yellow area, you start to get points where it may bounce off. Of course, nothing is guaranteed, but at least it gives you some idea. And if we can line any of these up with previous turning points in the marketplaces or other indicators, then that just adds further strength to your trade. Anyway, just wanted to clarify that one.
Good. Excellent. You do it better than I do. All right, so here's the chart, and I'm going to go to a 5-day chart. It just makes it a little bit easier to see this. Now, one of the dilemmas or the paradox of a day trader is, do I look at trend or do I look at momentum? And what I kind of want to do is I want to find both trend and momentum together. So inside of our studies button here, I'm going to just write pivots, and I'm going to put the pivots on. And now these are only good for one day. They change every day. I just want your folks to notice that the light blue one is our equilibrium pivot, and then you can color coordinate these above and below. And so this is what we were talking about. It's like for today, our first resistance was right here, right around $44. And there's your structure. I mean, you couldn't ask for a better picture of how you would define supply. Mm-hmm. And then that $44, that ATR is $4, right? So if I got into this trade and I'm going to look for a target, well, I'm going to look for that equilibrium pivot is my first target. But could I look for a greater target if price breaks below that pivot, right? And yeah, sure, I could look for that $4 ATR. And notice that our second area of support is $4 away. It's a little bit less than $4 away. But then again, when we had a big outside momentum day today, right? And then again, when we broke past that first level of support, right? How far did it fall? Again, ATR doesn't care the time it took. It fell from 140 down to 136. Again, it fell that $4, right? So, but I might still have set up a trade based on that momentum, based on the second level of support. Now, that would be if I believe that this market was in an uptrend. Now, I mean, if we went deeper into, a higher time frame, we could make an argument and say that, if I'm looking at a 6-month chart here, that Apple is in an uptrend. But it is very clear to me that right now we're in that corrective phase of that uptrend. And if I was looking to be a buyer of Apple based on this daily trend, I'm still probably, this would probably be this third area of support, this pivot that was created today, would be the first place I would think about looking to get long Apple based on this longer time frame trend. Okay, yeah. So
I'm glad you did that, John. Real quick, I'm glad you did that because there was a question came in from Edward. He says, "What about weekly and monthly pivots?" And I think you kind of just covered that right there. Certainly, you can go out and look at the bigger time frames to find those. Historically, though, guys, they were used for shorter-term intraday stuff because as floor traders were mostly the short-term end of the stick. However, like everything, you can use them on the bigger time frames.
Yeah, I would definitely implore to your listeners that the floor traders pivots are designed for day traders, and they're only good for one day. They're based on yesterday's price range, and they're only good for the current day's trading. Okay, so let's look at the S&P again. I mean, I didn't set this stuff up, and let's go to a smaller time frame. What's nice about our chart is that, if you change your time frames and you're looking at a technical analysis, let's say a moving average or something, and you go from a daily or a time frame where your intervals changes, that also changes your technical analysis. But when you do floor traders pivots on our website, they stay at the same values. They are just those daily time frame pivots. Now, again, here we can see this is for the S&P. Now, again, it's a little, again, convoluted, but right where the momentum, right, we swung through, right, the momentum, the clock, the pendulum, we got above that intermediate, that equilibrium pendulum pivot, and that would have told us that price should swing to the first area of resistance. Well, look where that first area of resistance is. It's up against one of our, what we would consider to be an area of supply, right? And, if I go over here, this is a 5-minute chart. I'm not a big 5-minute chart fan, but I mean, it's pretty obvious right there that that's right in line with structure where price should have failed. And sure enough, it did. Now, if we looked at the distance that it went from this pivot here to this high, I bet you it's pretty close to the ATR. Now, listen, I didn't set this up, but let's just look. The blue line is 37, 67, 69, 90. So let's make it 68, right? And we got up to, what is this, 24, 25? Let's have a drum roll, Merlin.
There you go. Good? Probably just totally tweaked my microphone doing that, but that's fine.
Yeah, sorry. So we got a 60? Is that right in line with that? I think that is. I mean, maybe this was low to high, but I mean, that, let's go back to our chart.
I liked it that Barchart has it. It's nice the way it lays things out. You have it real clean and easy. I can real quickly. I'll show you guys a different platform. And this, it doesn't do as good of a job, in my opinion, of presenting everything because it does give you the 4 trader pivots. It doesn't quite give me the number breakdown. I like that kind of Excel, not Excel, but just almost spreadsheet based numbers.
Right,
That's
right. So we got up from what was our low, right? So we had a 2 pivot move today, but we went from a low of 7,300 to 38.20, so 60.60. That'd be 2 60-point moves. But I think the move was let me put the pivot back up there. It does look like it swung through the equilibrium pivot to the high pivot. Yeah. So I mean, it. 67 to, 29, 28. I mean, that's 60 points right there, right? I mean, that's what's the beauty about these kind of pivots. And if you were a day trader and you were trading this intraday momentum, this upswing momentum, you would be very cautious about staying long when you got close not only to your structure, your resistance structure, but now you're getting into the pivot resistance, and the distance you've traveled is also related to your ATR. So you would be like, hey, I'm looking to tighten up my stop, and I'm going to look to ring the register.
Question from Alpha. Alpha says, will the zone work better if there is a floor pivot in the basing where the zone formed, not just the retracement?
Yeah, I mean, that's exactly what we want. We want to find them when they lay on top of each other. The floor trader pivot ends up becoming more of a confirmation that your zone is going to be a good zone, right? So
yeah, absolutely.
One of the markets that I trade a lot is the soybean market. I love soybeans. It's been really a great market recently with because the dollar finally gave up its strength, and it's been it's kind of had some really nice moves of a recent. So let me just put that up for a second, and then I'll give you back the screen because I know you like.
No one needs to see my ugly mug anymore. I'm all disheveled in quarantine anyway, so.
Right. So again, right. So here would have been a structure that was probably created in overnight or from the previous day, right? Or the previous morning. I love morning zones. I think you and I have discussed about looking at zones that are created in those first few hours of our morning sessions. And then, we came back to it in the early morning session this morning, right? This area. But it was also, right, we swung through the pendulum swung through our equilibrium pivot. And where did it stop? Well, it stopped right on our first resistance. Then it swung through, right? Now momentum has changed the other way, right? So how far could it fall? Well, from that point, from that pivot down, it could fall 1 ATR. So that's 1377, and I believe the ATR for soybeans is running around 37 or so. Let me just double check.
Of course, you got it in a couple clicks right there.
Yep, 35, 36, 37, right in there, right? Go back to my chart.
What's interesting for the viewers out there, and after he goes this, we'll check that out. But one of the things I find interesting about how Barchart structures it is when you looked at the different studies that he had there, it was giving you for a wide variety of different time frames: 9 period, 14 period, 21 period, and it really depends on what your trading style is. And after this one, we can look at that some more.
So we said it was around 30, 35, right? So we went from what? This high of 89, right? You minus 35, 36 from 89, you get like 50. Well, boom, look where we bounced the first time down after we broke through that swing pivot. So if you had an opportunity to get short this today, as you broke down below our blue pivot, right? There was a nice structure right there. That might have been a confirmation entry, right?
Yep.
As we broke away, how far could this fall? Well, from our high of 89 and our ATR is 36, 38. Where I'm going to set my target? Well, I'm going to set my targets based on some risk reward ratios. But look, I would have, if I was patient and I trusted the momentum of the market, I captured the whole ATR today. And this is a 5-minute chart. Look how quickly this happened, right? I mean, talk about ringing the register and going home. That started right in the opening range of the morning session, and you were done by 9:45. I mean, that was an hour and a half move, an ATR movement in like an hour and a half. And, ring the register and go to the golf course. You know what I mean?
Yep, get out and enjoy life as we should be doing.
Right.
There's a really good question coming in from Batista. Batista said, did I miss if the pivots are Globex or regular trading hours?
So Barchart for the equities, it uses the regular trading hours for the equities markets. For the futures markets, it's the whole session, the Globex and what we would consider the regular trading hours, the 23 hours or 21 hours or whatever each one of our individual markets does. So let me just show you one other kind of little cool thing that's nice about Barchart is, so here I have a watch list of all the different futures markets. I just have a basket of ones up here. And so what's nice is this kind of allows me to look at all these different markets in a real quick manner. So last price, but that's my equilibrium pivot. And what happens is if price is below, it turns red. If it's above, it turns green. So it's already telling me the momentum of the market. Now notice that we ran up and we hit into we fell down and we hit this support, that first support. Now notice how all these numbers are black still, but now price has fallen below the first supply and it's turned red. So that is now telling me that the momentum of this market is even greater to the downside. And I can look at my ATR here, which is 12:30 seconds, and without going to you have to trust me on this one. Go to the 10-year note. And you will see that from the high that we made this morning to the low this afternoon, it was 12:32. So, I mean, it worked absolutely perfect in terms of the intraday momentum was down. You play the market on the short side. You look to try to capture the whole ATR. Now, this would be a great trade because the trend for the 10-year note over the longer period of time, right?
Yep.
Has been down, right? I mean, at least in the last few weeks, right? So this would have been where you took an inter-momentum trade with the trend, and that's really what we want to try to find. When we can combine the two of those together, That's nice. That's sweet.
I actually have a question on this chart right here. Brendan, who's with us today, good to have you, Brendan, and congrats on your silver today. He was asking me about the 10-year when we look at something like the ZN or the TY, depending on which platform you're on. Is that the yield or the price? That's the price of the 10-year. So right now it's at 136.070. The yield would be the inverse of this. So here's what the chart of the yield might look like. This is the quoted yield. So when you're buying these treasuries, especially the futures market, you're buying the price, not the yield. It's different.
Right. And just remember, Brandon, that they're inverse. So as the price goes up, the yield goes down. As the price goes down, the yield goes up.
What was there? Was one question? Okay. So I know you're a natural gas guy, but we've got a lot of nice moves happening in the commodity space. As today we saw a pretty nice move up in silver. Brendan would love to get your take on what the heck is happening with silver.
Well, listen, I started my career in the silver pits. I was a silver clerk, and it was the nickname of the silver market was called the Widowmaker.
All right.
And so, I lived it. I was there. I don't trade silver. I just think it's just a crazy, crazy market. Now, I don't, be honest with you, I don't even know what happened to silver. If you give me a second, let me look at my chart. So
no, it's okay. You know what? I respect that because I actually have a similar feeling. Like there's certain things that burned me in the past, and I don't even look at them anymore unless somebody asks me. Things like Apple. I could care less about Apple. So kind of funny.
Right. Well, I mean, I see a market that's kind of in a sideways action, and it just basically had a little bit of a breakout. The question I have for you, Brandon, is: did the dollar have a big move today? Did the dollar go down today? I don't know. I'm going to guess maybe the way the stock market acted that maybe we did see a retracement off of, the dollar index.
It was not really. I mean, the dollar for all, let me bring up the dollar for everybody. It's just really been traversing sideways and slowly building a base, I would say. Almost a tiny little inverse head and shoulder, but there's your dollar index for the viewers out at home. Not really much of a move. I mean, I think part of the reason, Brendan basically wants to know, are you bullish or bearish? And I have to say, I'm going to throw myself in the bullish camp on it because I feel if we get a bigger push to alternative energy, of course, that means solar is going to take a big move to the upside as they already have. That's going to require more silver, and I think that is certainly one of the bigger drivers for
it. It's more of an industrial matter than it is, I would say, a speculative like gold or something like that. And so I think if you're looking for trends or strengthened trends in silver, I would look for those fundamental background, and positive and reinforcements, industrial metals, like you said, and automotives and technology, computers. Silver's using has a lot of industrial uses, right?
Yeah, I'm definitely bullish on it, and I'm bringing the dollar back here because some people are asking about it. But there's your dollar chart on the weekly, guys, and yeah, you're right. It did go back and hit those areas from back in 2018. All in all, it looks horribly weak right now. But to me, this is that moment where you kind of wait and see, because if it's gonna bounce, this is that spot where the dollar is gonna bounce based off of that cluster from back in 2018.
Right.
All right. It's so funny. Everyone's talking about the short squeeze. The term short squeeze now, it's almost like, what was that term? The new normal. Back in February and March of last year, it's like, is this the new normal? Now it's short squeeze. It's like this term that everyone's using now. I love it. Let's wrap up this section. I want to encourage everyone to go check out Barchart.com. I'll bring up the page here. If you go to tools, you'll see he's got webinars on there. There's the free webinars. And John, you do them every week?
Yeah, it was one every week. We rotate through asset classes, equities, ETFs, options, futures. We keep trying to mix it up, and we kind of combine a basic strategy or one of the pages on our website, and I kind of just trying to show traders, users, how to use the website and to be a little bit more efficient and help them to make more informed, educated investment decisions.
Nice. Well, he's got all kinds of different webinars on there for free. I know that many here are just very information hungry, so there's a ton of free webinars there. I would encourage you to check that one out. I want to talk to you a little bit about what's happening in our current market right now, because I think it's crazy. Now, of course, we can get your thoughts on things like GameStop and AMC, which have just been going absolutely gangbusters. But then I want to circle back and talk about restrictions, regulations, shutting down, and the ability for these exchanges to look at someone's account and say, not only can you not trade this by buying or selling, you can only get out of your existing positions. And in some cases, I saw Robinhood today was actually forcing people out of their positions.
Liquidations, yeah.
Yeah, forced liquidation. So walk me through your take on that. I'd love to get your opinions on it.
Well, I mean, I understand what the exchanges are trying to do, right? They're trying to, I mean, the future markets exchanges do this all the time when we have this crazy exuberance or whatever, however you want to define it. And the way they kind of curb volatility is they raise margins. That's the simplest way that they know how to do it. And then eventually sometimes they actually do a limit. You can't enter a new order. You can only liquidate. So I think that's in cases to help prevent, a meltdown or, just the market, just the volatility just exploding out of control. What's going on in this is, I think this is a dynamically is a lot different scenario. What we're hearing about that it's, there's these grassroots and these Robinhood small investors that have found a way to pick on, the big Wall Street. It's the us against them kind of. They found this way of looking for short interest in
Sure.
it. But I think there's something else behind it. I think and I'm not a conspiracy person, but I think there's a lot more sophisticated trading that's going on. First of all, the algorithms, right? They don't care. Money doesn't care who owns it, right?
Yep.
And algorithms don't care who's trading. They go with the flow, right? So I think what has happened is that this is the way the exchanges, and you can see this cross currents in society all over, this macro change of the little guy versus the big guy, or one of the things that, again, I'm not a political person, but why was Trump so Trumpism, as they call it, right? Because it was against the swamp or the outsiders, right? So I mean, this is like a macro trend that I've seen in all parts of society, and I'm concerned. I'm concerned that when you start having market manipulation or you start having exchanges, I mean, how does the establishment fight back? How do they protect themselves, right? How's Wall Street going to say, hey, you know what? This has been a redistribution of wealth, right? But capital markets create wealth, and they also destroy wealth. And you and I both know that, yeah, the wealth has been transferred to the Robinhoods, but if they don't understand about how to manage risk, or they don't have put in stops or anything, that wealth that was redistributed to Robinhoods is going to be quickly destroyed, and that's not good for capital markets, right? That's what concerns me. Now, not only did we see, what we had, Bed Bath & Beyond, and American Airlines was big today, and GameStop. I mean, there was 3 or 4 other ones. But, I have like this little dog with flea stock that's in my account. I've had it for a while. And I know that there's a large short interest in it. And it's a $9 stock, or it was a $9 stock. Yesterday, it traded 3 times its normal volume, and it went up to $14.
I hope you dumped it. You didn't, did you?
No, because
come
this
on,
one
man.
is one of those ones. It's one of my dream ones, right? This is the one it's a 5G, whatever. I don't care. Anyhow, where do you think it was back today?
$9.
Yeah, $9. Exactly.
It's funny. We talked about this on yesterday's show. Here's AMC. We're talking about shorting it at $20 as it came into that supply level. And I mean, today AMC is down 46%, trading at $8.63. Next stop, guys, it's going right back to where it was, down around $4. I mean, that's the nature of the beast. I actually put an order to to cover my put. You guys know I bought a put yesterday on GME, and that was when we were trading at 335. And for a little bit while today, it was really underwater, and all of a sudden it's back, doing very well. But again, I think
for a while, right? See, you didn't cover either.
No, I actually put a limit order because the spread on these things was massive on options on GME today.
Right.
So I put just a ridiculous limit order out there, hoping that someone would take it. It got really close to it, but I'll get there in the next couple of days. But this is the normal trajectory for all these pump and dump things. This is what's going to happen. It's going to come right back down. It'll still have bigger swings, but it's like throwing a giant stone in the pond. You get this huge move of water, and then all of a sudden, every ripple from that point on gets smaller and smaller and smaller until it goes back to the flat pond that it was. And I think that's what you'll end up seeing. Do we see GameStop come back down here to this $20 mark? I do.
I would even argue, listen, there's two concepts I want to talk about here real quickly. First is, when you talk about kind of cycle of price, or, how like a stock will start to rise or something, insiders buy, and there's fundamentals, and then it gets in the news, and then, talked about, and then, then you have speculation, and then you have exuberance, right? Well, in the futures markets, that was very common too. But one of the other things that the height of a market, right, when the market went, ballistic, parabolic, who was the last persons that would buy that market? It was always the shorts, right? Yeah. They got squeezed out. So what happens after that? Everybody who's has to buy or did buy has gone ahead and bought. There's nobody left to buy.
Right.
And what does price do? It
Yeah.
drops,
Yeah.
right?
Right.
That's bad for this equities market, because what could have happened in this last wave of all this short covering in all these little stocks is that we've now disrupted the natural flow between buyers and sellers, and that we have been on one of the longest bull markets. I mean, yeah, we had this correction last year during COVID, but I mean, you're talking about a bull market that's been in place for almost 10 years. Many times the tops of bull, I'm not making this prediction, I'm just saying, Many times the tops of bull markets come when you squeeze the last short out, and that's another thing that I'm kind of concerned about. But the other thing is, Merlin, is that how does the establishment fight back against these grassroots, these Robinhoods? And you saw it today. What did they do? Limited amount of trades they could do, raise the margins, right? Are we going to go back to a full margin, markets? Are we going to get rid of leverage, right?
Yeah.
And options are, I saw something like IB, right? Interactive Brokers was making people put up 300 or 500% margin on a short position, any short position, right? So how do you get those people out of the market, right? So you raise the margin so they can't trade. One of the things the exchanges used to do to eliminate, small price fluctuations on small volumes is they made a minimum contract value, right? You had to trade 5 or 10 or 100 lots. What if we go back to, they say, okay, yeah, you can trade these stocks, but you have to trade a minimum of 100 shares, right? That would eliminate a lot of these little people, and that's another thing that concerns me, right? So I mean, I don't know.
What concerns me isn't the restrictions, right? I'm not so concerned that they're preventing Robinhood traders from buying and selling, because when you look at the numbers as a whole. And I know this sounds very condescending, but the vast majority of Robinhood traders don't have a freaking clue what they're doing, right? They're basically just saw some headline that this thing moved up 100% yesterday, and they're buying into it. And I made the point on yesterday's show that somebody out there, most likely a Robinhood trader or some retail guy who just got caught up in the hype of fear of missing out, ended up buying at $380 per share. And today, someone's holding that bag at $480 per share. I did not think we'd get up to $480 today, but someone's going to be left holding it. And I think that if you're Robinhood, you're kind of trapped. I saw some comments come through here talking about lawsuits against Robinhood. And the deal is this. It's a damned if you do, damned if you don't. Because if Robinhood does it, Big Eb says Robinhood is going to get sued, that was BS. They already have a class action lawsuit against them that just came out today. Well, here's the issue. Robinhood, I'm sure in that contract that people signed, had the ability to refuse right, for anybody to trade anything. That's in their contract. Why? It's a risk management tool. If people are trading something that moved up 700% in a couple of days, that's extremely high risk, and they run the risk of blowing their account. What ends up happening when someone blows their account is they do irrational things. They shoot up buildings like they did in Atlanta years ago. They kill themselves like that kid did last year. That's a bigger liability. Sad. That's a bigger liability to Robinhood. So Robinhood has to weigh this. Do we restrict people and pretend we're being risk managers here and prevent them from getting involved in this stuff? Or just let you do whatever the hell you want and lose everything? You're going to sue us either way. So I'd rather not have a death or some crazy injury looming over me as a lawsuit. I'll take that, we wouldn't let them trade lawsuit, which they'll probably win that one anyway.
Right.
Crazy world.
It's so bizarre. I mean, in my lifetime, and you can kind of remember this too. Think about it. I mean, I can remember a time if I wanted to buy a stock, I had to pick up a phone, call a guy who sat at a desk, right? Give him my order. He would write it down, give it to his secretary. She would type it into a machine. Then it would go to the exchange. It'd be printed out on an order ticket. That order ticket, some kid would rip off, run it across the exchange floor, give it to a broker. He'd fill the order. He'd write back on it, go back. They tell it, type it back in, give it to the broker, back to me, right? Today, what happens? You get a hair up your ass, and you lift up your phone, boop, you're in the market, right?
Yeah. Yeah, absolutely.
My concern is the establishment will say, to protect you, we're going to slow the game down.
Yep.
Right?
Absolutely.
We're going to slow the game down. We're not going to allow you to have instant access to the market because, like you said, you don't know. We're smarter than you, and we're doing this for your behalf. That's my concern.
Yeah. And I agree. I think you were right on point when you talked about what does the futures markets do? The futures market has a lock limit, right? If the futures move a certain percentage in either direction, they're going to get locked, right? You can't trade for a certain window of time. There's rules against that, If the S&P 500 jumped 100% tomorrow, it actually couldn't. It would be stopped. There would be breakers out there to prevent it from going that high. I mean,
actually, you're wrong. There's no breakers to the upside. There's only breakers
just downside.
To the downside.
Right? Yeah. So if it gapped down 50%, sorry, I was just thinking that. Okay. But some markets actually do have upside locks, but not the S&P.
Yes. But your point being is there's protections built into the system, where in these equities markets, especially when they go to the upside, there's no protection because it's deemed that everybody's happy when price goes up, right?
Yeah, absolutely. Tom says if somebody bought on margin and they can't cover, the broker has to cover, right? Therefore, they should restrict. True. The broker will be on the hook for it initially, but trust me, they're coming after you. So let's say I shorted a stock at $10 and it jumps, and I'm fully margined, and it jumps to 20 the next day. I've lost everything. I've lost 100% of my capital. If it jumps from $10 to, let's say, $40, I've lost all my capital plus another $20,000 I have to come up with. And you rest assured, they will be coming after me for that $20,000. They're not going to just be like, oh, well, we got it. They're coming after you.
Well, a lot of brokers have the right to liquidate not only your position, but liquidate all your positions to satisfy your margin. So what would happen is, you might lose all the money that's in your account, not just what you bet on that one individual stock.
Well, right? here's a good example. I mean, I'll bring up Gamechart stock of yesterday. I'll put some lines on here just so you guys get an example of margin. So let's say you had, and I'm going to use an easy number here, is you had 100 shares short of GameStop and at 147.98. So that's $14,798. Let's call it 15 grand. The next morning, even if they had circuit breakers where they could dump it for you, it opened up at $354. That's a $200 jump. That means anybody who was short lost well over 100% of their investment and now received a margin call. Account is closed, and they're now hunting you down for that money. That's the risk here.
Hello, we stopped you out, and by the way, you owe us another $30,000.
I mean, we can laugh at it because we've heard of it happening to people. I've received margin calls in the past, but never anything like that. This is the type of thing, and I hate to dwell on it, but I mean, this is the type of thing that makes people do irrational, stupid, crazy stuff. I brought up the story about the Atlanta shooting back in the floor in 1998, 99, that I remember I was on the trading floor that day when that shooting happened, and I mean, that resonated through every trading office in the United States. Like, oh shit, somebody just went rogue because they lost a ton of money, and I clearly can see crazy stepping out of the woodworks because of this. So I actually think it's a good thing Robinhood shut them down. This is way beyond crazy.
Right.
Something moves 30, 40% and you jump in on it, that's fine. We're talking hundreds of percent per day. Shut it down. Let cooler heads prevail and this thing get back to normal. Anyway.
Right. In the old days, they used to do that. Like if you had a dividend or something or a earnings report that was way out of line, they would stop trading that stock and they would hold it. When it reopened, it would have a huge movement always. But
they halted it today multiple times. I think it was 3 or 4 halts today alone on GameStop.
It's bizarre.
Yeah.
You talk about people doing stupid things when they lose crazy amounts of money. I do remember a time. You love floor stories. I do remember a time where there was a floor trader, and I don't remember what market he was in. I don't believe it was in the energies, but it might have been. Because back when I worked on the floor, the COMEX and the NYMEX were together. But I kind of think remember he was a silver trader or something. But he lost a shit ton of money. Excuse my French.
It's okay.
And in a day, and he went home. On his way home, he robbed the bank.
Wow.
The next day, he put the bank money into his account, lost it all again, and so he went home the next day and robbed another bank. And he did this like 5 or 6 times until they finally caught him.
Is that the robbing Peter to pay Paul type of thing?
Listen, yeah. And if you can Google it, it's actually, I think they made a movie out of it or something. It's pretty amazing.
Crazy. All right. Well, hey, I encourage you to be safe out there with all this crazy shenanigans that's going on. I know you better than to think that you're going to be out there going all in on GameStop and AMC. So
no.
All right.
Go
ahead.
I said I do like the popcorn.
It is entertaining to watch. I mean, especially today's move was just. You may never see another move like happen intraday percentage-wise on today's GameStop. That was just absolutely crazy.
Look at that 60-minute chart here. It made a $350 move in 3 hours. That's amazing.
It'd be one thing if it was Berkshire Hathaway trading at $100,000 a share, but this it's different.
Right.
John, do you happen to know what that movie name was? Mimi wants to know.
No, I think it was one of those made-for-TV movies or something, but. Just Google it. Crazy floor trader lose all the money and robs bank on the way home. So, yeah.
That's a long title right there. All right, John. Hey, well, thank you so much for coming on today. I appreciate it. Hopefully I'll get you on next month. I do want to get you on to talk about crude oil, which obviously has been...
we're going to do natural gas, remember?
Well, crude oil and natural gas. I want to talk both. Let's just talk about this stuff. But, yeah, let's get you on next month. Otherwise, this show's going to go for 3 hours, and I can't handle that.
Yeah, I hear. Yeah, listen, let's hope for a polar vortex, and I'll come back in March, and I'll lay out the scenario where I believe that the price of natural gas is going to double by the time of October. How about that?
I'm liking it. I like doubling by October. That sounds fantastic to me. Who doesn't like 100% rate of return? If you're a Robinhood trader, that's chump change for you. I get it. But us mere mortals... All right, John. Hey, thank you so much, man. I appreciate it. Best luck to your trades, and enjoy that webinar. We'll talk to you soon.
Thanks a lot, Merlin.
All right, guys. Take care. All right, everybody. That was John Rowland. Make sure I got to check my microphone real quick. For some reason, every time I hang up on the guest, volume spikes. Looks like it did okay today. Anyway, guys, that was John Rowland giving us some insights into trader floor pivots and then a little discussion on the just sheer historic mayhem that's going on right now. And I think how we all can tell that this is so crazy and out of line is people at your workplace, your people at establishments that you frequent are all of a sudden talking about GameStop like they're professional traders. Like they've been doing this for decades because they made a ton of money on it. That to me is the funny part here is all these experts crawling out of the woodworks. There's Reddit followers now that are getting millions of people that are subscribing to their services because they made money on GameStop. It's like, if you're signing up for a subscription service, can I see your track record other than one short squeeze that you succeeded on? Anyway, let me go through this. Again, if you want to see John Rowland's webinars, he does them every week for Barchart.com. If you go to the front page there and just click on Tools, and then over here it says Free Webinars. You click on that, and you'll see right now the next one is going to be Wednesday, February 3rd. That is going to be Exploring Barchart's Dashboard. But there's a lot of trading-specific pieces as well as proprietary stuff to Barchart.com, and John Rowland is working for those guys. All right, let me go and show you your economic calendar and earnings calendar, and then I'll go into a bunch of listener questions here, so please feel free to type those on in, and I will get to as many of these listener questions as I can. Now, here's what I had cooking for today. You had Visa, MasterCard, Altria, Western Digital, and McDonald's report. You see that most of those did pretty well in earnings. Western Digital doing very well. Of course, I think that makes sense given all the working from home and technological needs. Visa, MasterCard, people charging stuff up. Gotta love that. 11% surprise and 8% surprise. Almost everybody beat on the price move after on those earnings, except McDonald's was down just ever so slightly, and they actually missed on their earnings announcement. Now, moving on to our next one here, which is going to be your economic calendar for tomorrow. You'll notice down near the bottom, we have a slew of things coming out for the U.S. markets. Of course, today's GDP number came out, and it wasn't as good as expected, but still showed 4% advanced GDP growth, which is good. For the U.S. tomorrow, you've got Employment Cost Index, personal income, and spending, Chicago PMI, and then one that I'm probably most interested on will be the pending home sales. We have seen historic rises in home prices over the past year, and that number is just, it's starting to escalate even steeper and steeper. Now, they're expecting pending home sales to drop from a 2.6% slide last month to only 0.5% slide this month. We'll see if that further bolsters this real estate market. Now, as far as earnings for tomorrow, you've got Caterpillar, Chevron, Eli Lilly, Ericsson, Honeywell, and Phillips 66 reporting earning tomorrow. So if you're trading some energy companies, those will be your main ones to focus on and keep an eye on. All right. I'm going to see real quick if we got any other questions here. Yeah. What's it? We got the Bitcoin fans are there. Did I get stopped out on GameStop? No, Jeff. Basically, I bought a put, so the worst case, it was what I paid for it. So I'm still in that put. I'll probably, I was hoping to get out by tomorrow, by the weekend. We'll see. If it drops down where it was today, right around 110, I'll probably just jump out. But the spread was absolutely massive on it. It was a $40 spread. Not a 40-cent spread, a $40 spread, and I'm on an out-of-the-money option contract. So just tells you how inflated these premiums have been for that. Let's see, what else did I... Bitcoin. Well, yeah, what time I got? I got 8 minutes. We can squeeze in a little bit of cryptocurrency, can't we? All right. Let's go bring up this chart here, and I'll bring up Bitcoin. We could look at some of the other ones as well. I mentioned on yesterday's show how it was it's critical, in my opinion, not the 30,000 level. 30,000 is that psychological number that I think a lot of people are focusing on, but from a technical perspective, let me take my snap mode off here. There is an area right here, which is 29,562 on Bitcoin's price chart. That to me, a close below that would symbolize some downside movement, some significant downside movement, and potentially closing that gap that happened in early December or mid-December. Good news is today we had a nice bounce. We're currently up about 1.86% to 33,400 on Bitcoin. I'm a fan of that. I think that looks pretty good. What was the other one? There was is it XM? I think it's XM today. Tomorrow I'm going to talk about this a little bit, and I'd love to get your input on it. This is XM Qualtronics, and I guess that it's basically if I'm not mistaken how this worked, it's a SPAC that bought the Utah Jazz. I'm not quite sure. Maybe the Jazz owner made it. But anyway, one of the things I found interesting when I was living in Italy is you have stocks on professional sports teams. And I know that there's a lot of talk about that happening here in the U.S. How do you think that might change our landscape for sporting events? For example, Juventus, when they were playing in Italy, you could go long or short Juventus like you would any other stock. And if they lost the game, you'd see share price drop. If they won, you'd see share price rally. Boy, doesn't this open up the potential to betting on your team and throwing the game? I don't know. You could make a lot more money by buying and selling your own company share or sports team shares and, choking right at the last second. I don't know. It just seems like a weird topic that's coming out now is going to be sports teams publicly trade on the markets. What else do I have? Anybody else got any questions for me? I don't see any other questions. Oh, great. No. Hey, tell you what, if anything, Wallstreetbets are great marketers. These guys did very good. I was actually surprised to see that Reddit kind of limiting them and shutting them down. There's no reason to do that. They're just going to pop up. It's just a group of people talking about the markets and rightfully so targeting somebody like GameStop. 138% short interest, logical target, which is why I posted that list of all the different ones that have the highest percentage of short interest. That's your next logical list of targets. All right, guys, that's going to do it for me for today. Just to disappoint Big Eb and the others, I want to make sure I did not get to a 1 hour show today. We're keeping it about 55 minutes. Tomorrow, I do not have a guest for the program, so it'll be just me, a nice frosty glass of whiskey, hopefully enjoying the closure of my GameStop puts, because I certainly want to take that into the after-hours session or over the weekend. So if you guys have questions for me, feel free to send those on in. You can send them to the email that's on your screen right now, which is TraderMerlin@gmail.com. Feel free to send those in. And I know I have a couple questions from viewers. Kind of stockpiling those. Those are going to get answered on tomorrow's show. But send them on in. If you like today's show, give me a thumbs up. If you are new, click the subscribe button so you can be alerted every time we come out with a new show, which is every day at 2 p.m. Pacific time. That'll do it for me, everybody. Have a fantastic day. Be safe out there. I'll see you with GameStop news tomorrow.